All right, I'm Bryan Dornan with Loan Modification Buzz, here with Jeff Morris. How are you doing today, Jeff?
Great, Brian. How you doing?
Doing good. Just got a couple questions for you now. You know, it seems like the loan defaults in California are between California and Florida, they're competing for the highest foreclosure rate, not to mention highest loan default rate. You being a former California broker, mortgage broker, and a resident in California, you probably know the market pretty well.
Very familiar, yes.
You're doing, I understand you're not doing mortgages much anymore. You focused pretty much exclusively on loan modifications?
Yeah, the reason being is that they've made it so difficult, the lenders, for a client to actually refinance.
Okay.
They just want to bank the money and keep themselves. However, Governor Schwarzenegger recently signed a bill, it's California Civil Code 2923.6, that mandates that lenders must work with borrowers in most foreclosure type situations. And that's kind of what we use as a leverage to help the lenders, or kind of force the lenders to do modifications for clients.
Okay. So California sounds like Schwarzenegger and just California state government in general has been pretty aggressive on behalf of the homeowners. Would you say? Would you agree with that?
Yeah, I mean, it's a problem. I mean, I don't know what the percentages are, but since 2006, I think the home values have dropped about 50%. People are losing their home left and right. You know, nobody is really doing anything. Schwarzenegger stepped up to the plate, and he put a law in place. And there's a couple outs, if the client can't afford a modification, or can't afford to make the payment after loan is modified, obviously that person's not a good candidate. But if the client can make a payment, if we reduce the payments, say $1,000 or whatever, then that client should be able to qualify for a loan modification. Of course, there's different circumstances, but Schwarzenegger really wants to make sure that he does his part to help the housing industry out right now.
So 2009, you think that's going to be, you see that as a good year for loan modifications, or is it too late?
No, you know what? I think it's actually just the beginning right now. I think I'm seeing a lot more flexibility.
Okay.
I'm seeing a lot more balance reductions. I just got a client who just got a 1% interest rate. It blew my mind. And
wow.
the lenders are becoming a lot more responsive now. In the past, they didn't have a loss mitigation department, or at least nothing that was that could take on the influx of clients trying to modify the loan. Now they're starting to get to that point. So we're starting to see a lot more people getting their loans modified, and things are starting to make a lot more sense.
Wow. Well, that's good to hear. I know you got a lot going on today, Jeff. Thanks for taking time out. Loan Modification Buzz. We'll talk to you soon.
Thanks a lot, Brian.